Ladies and gentlemen, welcome to a new episode of the FinTech Hunting Podcast. We have a very special guest for you today. She's an industry thought leader, capital markets expert, a non-QM evangelist. She's a technology expert who specializes in expanding markets through product and pricing. And she was just named one of the most powerful women in FinTech. Please help me welcome to the show, Eloise Schmitz, co-founder and CEO of LoanNEX. Eloise, welcome to the show.
Well, Michael, thank you. That was such a big introduction. I really appreciate it. But thank you very much. I'm excited to be here.
Well, it is great to have you. You have a wealth of knowledge and expertise. I just want to dive right in. Talk to me about what are you seeing in the current market conditions from kind of a capital markets perspective? We know refi volume's down, we know rates are higher. Give me your perspective on where we're at in the market right now.
I think we're at a really, really interesting time in the market. Listening, as you said, the refi volume has been down for quite a while, and therefore volume's down. And so for an average origination shop, that's fewer volume across a fixed amount of expenses, a challenging time to grow that volume, and a highly, highly competitive market for loan officers to compete against each other on a smaller base of transactions. So you've got that dynamic, which has been going on for a while. And the market continues to right size, but they're asking, are rates going to start to drop? Is that right sizing really going to shift quickly? And do I want to make some of those changes? And some of the things that we've been trying very, very hard to evangelize, as you said in your opening remarks, is there's a lot of products out there, and a lot of origination shops have not opened their funnel to more products. So they're competing in a highly competitive market on the same traditional products. So I think there's a really, really unique opportunity in the market right now to serve more borrowers, to make sure all your loan officers are armed with as many products to serve as many borrowers as they can that are relevant to today's market.
I couldn't agree more. So give me some examples. What are some of those products that you're seeing, really the lenders that are leaning in and being very proactive? What are some of those products that they're offering?
Well, the easiest one to talk about is second-lien products, closed-end seconds and HELOCs. And the volume for those have gone up tremendously. Certainly, if you're sitting on a mortgage that's at a 2.5% interest rate, you're not going to refi that mortgage, but you want to tap, the significant equity that you have in your house. And that's a very easy way to not have to go through a cash out refi your whole mortgage at a higher interest rate when you're really looking for just an ability to tap some of that equity. The products are developing quite nicely, but really what's wild to watch is how much liquidity there is in the market for these products. So when there's more liquidity, meaning there's more institutional interest in these products, then the access to those products grows, and then it's able to feed a broader base of borrowers. Yes, there is a lot of securitizations that are going through supporting that liquidity. And all of that just means that products are going to be more readily available. So it's really important that loan officers have access to, either one or two outlets for these products. And certainly all origination shops should be making sure they've got a full breadth of products to serve borrowers.
So are things shifting away from some of the depositories? And if so, where are they shifting to?
That's a great point. That's another big part of the market that's changing. A lot of the depository banks, for interest rate reasons, for their own balance sheet reasons, are really not holding loans on their portfolio, on their balance sheet as they used to. Certainly, a lot of the big banks aren't, and a lot of the middle tier banks and regional banks aren't, because as they look at what that interest rate environment is, they're really preserving that capacity on their balance sheet for larger relationship loans and not as many for mortgage loans. As that shift is happening pretty quickly, what an origination shop used to be able to hold that loan on their balance sheet as a portfolio loan because it's a non-agency loan, now needs to find an outside source for those loans. If they did have A, B, or C as their outlet for those loans, they now need to find a different outlet for those loans. There's a lot of change and migrations that are going on in the market in total. But I think they're actually very exciting times because that's actually opening up so much more innovation in products. We're seeing products come out specifically for doctors in their residency, different kinds of professionals. A lot of these kinds of programs that traditionally work portfolio only, meaning you'd have to know that regional bank that's offering that particular product, and they're getting offered by more of the institutional providers. And so it's just, there's a lot of innovation going on in the market. And probably the greatest point of evangelizing the market is getting people to understand how many products are out there, either with their current partners or with new partners that they could be working with to open their funnel of opportunities.
Well, I love talking about innovation. We're here on the FinTech Hunting Podcast, and I think it really hits two areas, right? The first is innovation in product offerings, and like you say, opening up access and providing a lot more liquidity to the market. And in that sense, everybody wins. But the next part of the innovation is what I really want to dive into is it's great to have all these products, but if I'm an originator, how do I access them? What is the technology? What are the ways that lenders and or the loan officers can start accessing all of these incredible loan programs?
Well, thank you for that. That certainly is a great tee up to talk about the LoanNEX platform. What LoanNEX prides itself in is making the navigation across these nuanced products incredibly easy. I loved when we were giving a training session for one of our new sell side customers, and they said, I really appreciate all the training you're about to give us, but I don't need to have somebody teach me how to buy socks on Amazon, and I don't need somebody to teach me how to use LoanNEX. And it's that easy, it's that intuitive. And that extends itself all the way through a second lien product, a bank statement product, no matter how complex it is. The platform makes it so easy for a loan officer not to have to know where they're going to go. They just have to know what questions to ask and how to answer them, and it's going to show them where to go. And that makes supporting this, which can be incredibly daunting to somebody that has not really ventured into some of these non-agency products, it makes it really, really simple. LoanNEX is now distributed across 450 sell-side clients, origination companies, and over 4,000 users a month. So that means that is a high propensity of loan officers that are using the platform to figure out where they need to go.
Well, congratulations. I know you guys are growing at an incredible rate. I think that ease of use is really helping people say, I don't have to learn 50 million things. I can easily use the system, and now I can start accessing these other products. It gives them a competitive advantage. Talk to me about, you guys have done such an incredible job on the non-QM, the non-agency type loans, but that's not all you handle. Is that correct? Talk to me a little bit more that, people don't have to jump through 6 different pricing engines. They can really use LoanNEX to handle everything that they're looking to do.
Yeah, so we've got about 40 predominantly non-agency investors on the platform. They certainly host their agency and their non-agency products, but we have a significant amount of products on the platform, from prime jumbo, agency products, AUS eligible products, non-QM, traditional non-QM products, and second lien products all on the platform. And as you said, what it does is it makes it really simple for an originator not had to go hunt from lender or investor to investor or go through multiple sites, that really start there, figure out what their borrower is needing, and find the best options for those attributes and for what the borrower is looking for. We'll guide you through a Q&A of what you should be asking them so that they understand if that particular program that they're looking at is only available for long-term rentals, then you'll find that out as you go through the Q&A, so you're not matching a short-term rental property with a long-term rental program. So things like that. So make it really simple, that all those really important nuances that don't typically come across in a pricing engine get you all the way through all of that eligibility and pricing adjustments.
Well, I love it. And let's talk. The complexity that you guys deal with is phenomenal, how much easier you make it for all of your audiences. But let's walk through a little bit of the audiences that you serve, because I think, we've been talking and it's great for a loan officer to be able to access this, but talk about all the different parties, the correspondents, the wholesale lenders, the investors. Walk me through that, because I think people are going to be as shocked and amazed at how well you serve the whole life cycle of the loan and capital markets.
Thank you for that. Yes. Well, certainly at the origination point, we serve brokers and retail loan officers. The platform is available to originators so that they can access multiple investors, or they can access directly, on a one-to-one basis, and I'll have it margin adjusted or pricing adjusted for that audience. We do have a significant amount of correspondent investors that are on the platform and accepting locks through the platform. And so that allows for that loan officer to submit that to their lock desk, and then the lock desk to submit it directly on to their correspondent investor. And that is a very streamlined workflow. So it certainly supports all the parties, but it also is in multiple platforms. So it's sometimes on a standalone basis so that it can go from loan officer to lock desk to investor. And it's also in Encompass, so that our Encompass wholesale and correspondent lenders can extend that pricing right through their TPOC portal, and brokers can come in and price and engage directly on that LoanNEX platform. So whether you started in LoanNEX and then entered into your lender or your investor's platform and you continued on LoanNEX, or you're able to use a straight through, you're getting that simple ease of use and consistency and eligibility and pricing across the entire experience.
Well, and I think that simplicity and being able, that consistency across it, really makes it easy, and eliminates a lot of the confusion, a lot of the frustration of going from one system to the other. I think some of the stuff that you guys are doing is just absolutely incredible. You just recently came back from the secondary marketing conference. Any things that kind of jumped out at you from the discussions you had and the different sessions that you were able to listen in on?
Probably the biggest discussions are around ease of transactions, meaning going all the way through that lock process on LoanNEX, and a lot of conversations around that, because we do provide a very simple ease of use on a very sophisticated lock platform. So it's addressing both that originator all the way through the transaction point. And the other big theme that we heard was, seconds. That part of the market is growing so quickly, again, because of the liquidity sources. And again, having, again, an engine that can allow for that lock to happen when it closed in second as easily as it can happen on a first lien product is super important, especially as that is a big portion of the volume that's going through right now. That, there's those same trends: access to more products, transition away from portfolio products to institutional products, which is a big change. And seconds, those were like the main three themes we kept hearing over and over and over again.
And as you listen to those themes and you look to the rest of 2024 and into 2025, are there any additional themes or any additional areas that you think, as the market continues to evolve, this is what people need to be aware of?
I have a very simple vision coming into this mortgage industry from outside the industry, and that is, it's an investor or investors are interested in putting their money into this market. It may not always be in the same form of a product that's been around for 20 years. It may have some changes and some evolution. That's good for the industry. That
Right.
doesn't make it bad credit. That doesn't make it a bad product. It just means the industry is changing. And there's a lot of talk about how the industry can change, whether it's on FICO scores or whatever the case may be. But it won't be able to be effective unless those changes can make it all the way down to the loan officer when they're serving the borrower. And that's really the entire vision of what LoanNEX has brought is enabling an open pipe of evolving products, evolving participants in the market so that they can be carried all the way from the investor all the way down to the loan officer in the most simple, intuitive, easy way to use possible. So we're really excited about that, really coming to fruition in this market. There's a great need for that from both the borrower and the loan officer's perspective. There's so many people trying to get into houses or be able to take advantage of the equity they have in their homes. And this is a really, really important time as rates are higher, to make sure that you're finding the right kinds of products to fit your borrower. And there's increasing demand for investment properties, continued increasing demands for investment properties. And those properties are coming in all different, those products come in pretty nuanced kinds of requirements. Having the tools to help you be successful is really important to be able to serve more borrowers. Your borrower doesn't know that what you have may be a different set of products than the other guys. So they're relying on you to find the answers for them. And that loan officer may have all those answers right at their fingertips, but they don't even know it because the tools that they're using aren't really enabling him or her to find, what that best match is for the borrower. So, really encourage people to not only find the right partners for their loan officers to serve, but then give their tools to the loan officers to navigate all of those products.
Well, Eloise, I could continue to talk on and on. You have so many great insights. I love the vision of where you're going. And I think the main thing is you've made this very simple in a lot of complex areas. Don't struggle if you're a loan officer, if you're a lender. There are great tools out there. Eloise, what's the best way if they want to get a chance to see LoanNEX in action? How can they get a hold of you? What's the best way that they can see this so that they can find out all of the incredible solutions that you're delivering to the market?
The easiest thing to do is just to email sales@loannex.com or go onto our website at, www.loannex.com. I'm going to say one more thing, and that is the access for originators there is a free option for originators to use the platform without having to make an enormous investment in their technology. That's sponsored by your partners. And it is just a way, again, to provide a very, very simple way for loan officers to find more products and programs. It can be fully integrated, which is another option, but there are ways to be able to access the technology and access these resources without breaking the budget. Sales@loannex.com.
I absolutely love it. I can't thank you enough for being a guest on this episode of the FinTech Hunting Podcast.
Thank you so much.